Welcome to a Portfolio Matters Share Talk update on Solgold. And before we continue with this, Keith will read the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Take it away, Richard.
Thank you, Keith. A couple of days ago, Keith found an article on a website called cruxinvestor.com that referred to Solgold that we had missed in our original Solgold presentation. And this article doesn't take a particularly positive view of Solgold, so we thought it was important to put this update out that takes the conclusions of the article into consideration. So just as a reminder, Solgold has a market cap currently of around 446 million, share price 22p, and its main story is the discovery of the 3 billion ton Alpala copper gold resource at the Cascabel project in Ecuador. So the inclination of our presentation was generally positive, and the project has a positive NPV as reported by Solgold of in the region of $4 billion. So with a market cap of 446 million, it looks like it's a good investment. We have come across this article, which is quite negative, as I explained. And let me talk to you a little bit about what they say. So the company has two major shareholders, as we discussed previously, Newcrest International and BHP Billiton. BHP Billiton, just slightly the major of the two. And they're the largest two shareholders in Solgold. And as additional funding, it has 100 million with up to 150 million in total from Franco-Nevada. And we are still awaiting the pre-feasibility study, which has been delayed. And the economic studies that have been done so far assume that a technique known as block caving, which is the lowest cost underground mining technique, would be used. The issue with doing open cast is that high-grade core only starts around 600 millimeters below the surface. So there'll be a huge amount of material, low-grade material, needing to be removed before the higher grades are reached. So this block caving technique of mining is the technique that the feasibility study assumes. Now, block caving is apparently an inflexible technique and requires a huge capital investment at the start, has a very long lead time and a slow ramp up, and can pose dangers should the company make wrong assumptions for rock mechanical and geohydrological conditions. So it's by no means a dead cert, is what this article from Crux Investor says. And it really needs to be undertaken by experts with both the experience and size to support the exercise, which BHP Billiton and Newcrest are. So they're posing a question mark over the complexity of block caving, and that it may not be as simple as the forecasts of Solgold suggest. And they also consider that the grade forecast for copper and gold is over-optimistic. They feel that the pre-production forecast period of 4 years and ramp up to full production of 60 million tonnes a year by year 6 is actually shorter than for comparable operations, which means the earlier cash flows will be lower. The grade forecast obviously means there's less material recovered. And they feel that cash operating cost assumptions of $10.6 a tonne are low in comparison with costs of $10 to $20 a tonne seen in similar operations, i.e. right at the bottom end of what's actually experienced. So when they put all of this into their model, which I don't have any more detail, other than the price they use, they arrive at a cash operating cost of $19 a tonne, which clearly is very significantly higher. So moving on, they think that the capital estimate of $2.8 billion is low, and that it should probably be pretty much twice that at $5.3 billion. And with all of this, and using a discount rate of 7.5% and spot metal prices on October the 20th, they come up with a negative NPV, as opposed to the 4 billion positive NPV that the company comes up with. So the conclusion from this is that clearly there's a great deal more uncertainty than we realized in terms of the calculation of the NPV. And it may be that Solgold have used overly optimistic assumptions in calculating their NPV. So who does this matter to? Well, the answer is it matters to private shareholders who would end up funding the development most likely, but probably through dilution may well not benefit from the value of the copper resource. Who isn't impacted by these problems and who actually is probably very well aware of them? Well, the main beneficiary could be BHP Bulletin as the major shareholder. It doesn't have any significant cost of waiting. It's interested in building up and allocating capital to its copper division for the long term. BHP doesn't mind what the Alpala, what the Solgold share price is. It's disinterested in that. It knows that a good porphyry deposit of copper is hugely valuable to it, and it owns several. And it can simply wait for all the studies to be done and then step in as the organization that takes the bulk of the capital value in the project. So that's the sort of synthesis of Crux Invest's concern about Solgold. And we felt it was important to let you all know about that. Do you have any comments, Keith?
Yes, thank you, Richard. No, I think as the facts change, we change our minds, essentially. And so we came across this and thought that we should update our viewership and remove the previous Share Talk video. Now, the other thing that I would say is that one thing Richard hasn't mentioned, it's also in this analysis, is that Solgold are committed to a big exploration program. Thank you, Richard. Over the course of the next couple of years, which if they don't commit it, they don't actually execute it, they are on the hook for 80% of the cash value of the exploration program. And that from the top of my mind is something like $480 million, which they don't have. And so they have a funding problem, all of which I was unaware of. So in balance, I think Solgold is a lot riskier than we had previously appreciated, bottom line.
I think that's right. Effectively what it is, I think what we're saying is possibly if, the existing mines with existing resources that they are currently extracting from would possibly be a safer bet than Solgold, which is at this stage a speculative play and one where it is unclear where the capital value of the copper deposit will finally accrue.
Very good. Okay, thank you, Richard.
Thank you, Keith.
Please,
go on, Keith.
Please, can you press like and subscribe to the channel and check out some of our other Share Talks. And it's goodbye from Richard Rita.
It's goodbye from Keith Jordan.
Goodbye.
Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.